Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, December 20th, 2019. I'll start out, quick look at the broad markets, nothing new to report. They just continue to inch higher. Almost a flat day today. We're up 0.07%, so again, a flat day, but no changes in the technicals. We're still above those 60-minute uptrend lines, so here's that wedge. We're watching 60-minute wedges on all the indexes. This is SPY, QQQ, same story there. There's a trend line. May form, as I said yesterday, may morph into more of a price channel. We can certainly draw a price channel right now and say that we're in one there. And there's the divergence line right here. Remember, divergence lines can be moved around if we continue to work our way higher. So that's it. Nothing new to update. Absolutely zero sell signals on the market right now. But it's markets like this and in securities like this that tend to have sharp drops out of nowhere that catch a lot of people off guard. Doesn't guarantee it's going to happen, but when you see any security kind of go into autopilot where it's just kind of walking up and up and up, and it happens for an extended period of time, what happens is you have complacency. Trader, you have shorts get blown out, they give up, they cover, you have very little short interest in a security or the indexes, and you have too many longs in the trade. Once all the last long has bought his or her last share, there's really no one left to buy, and that's where the big drops come from. So there's NQ, still watching again these uptrend lines. That's a yellow uptrend line on NQ, NASDAQ 100 futures. ES right there. Here's our divergence line. Like I said, we just continue to move that up. And we watch these uptrend lines here. Let's tighten that one up a little bit. There you go. And then, like I said, my favorite, if and when these go RTY, looks like a nice pullback trade. So again, if you get a breakdown in RTY, you can certainly take that. Just wouldn't get too aggressive with a short on the small caps until and unless the large caps confirm. So maybe a partial position on a break there, and then add if and when the SPY and QQQ or NQ and ES also break down. So talking about one-sided, lopsided trades where everybody's long and bullish and citing all the reasons why something will only go up because shortages in palladium. This is what happens when a one-sided trade breaks. So here's PALL down 5.31%. Look at that big red candle. So yeah, the daily chart broke down the other day. Fairly impulsive initial candle, but no follow through the next day. We had a green candle, but then today we got another red candle, and that's what you call an impulsive sell-off. And although I had the comparable target. Remember, ETFs, any commodity ETF, whether it's natural gas, crude oil, they're buying the futures contract, and I understand a lot of you don't have access, experience, or the capital requirements to trade futures. But ideally, that's the pure play, because the ETFs, although they try to do a good job, I take this back. And this one says physical palladium shares. Maybe they don't trade futures on PAL. Maybe they actually hold physical. But again, most of those are tracking futures. And again, so you want to, even if you're going to trade the ETF because you don't have access to futures, most brokers will give you free real-time quotes on futures. And if not, you can use investing.com. They have free real-time quotes. You don't even have to have an account with them. And you can create a free account too and save your charts. That's a benefit there. Let me show you PA futures. So we hit the target today. Remember, this is an unofficial trade. When I show you levels, if it on official trades, you're going to see T1 equals. First of all, official trades are never on futures because I realize a lot of traders don't have access or the experience to futures to trade them, or again the capital requirements. Every single contract of PA represents. Let's see, I'm back in it now. Can reverse my short today. Right above the 1800 target. Let me look at another monitor. Raised my stop to entry, and then went back in because we've had another pullback here to that 1800-ish level. And each contract's about 180,000, almost 181,000. So that's not for everybody. That's the net exposure you have to palladium. So if it's down 5%, do 5% of 180,000, you're talking about $10,000, and that goes either way. Usually you're not going to see a 5% up day, but it's possible. Now the point is, this is what, there's a couple takeaways here. Number one, this is a great example, technical analysis. This was in the recent updates in yesterday's video, 1885. That was support. You see, we're dancing along there. We already put in the divergent high. We started to get that wonky, choppy trading. As I said, a healthy uptrend, you're just grinding higher. But when you start to kind of the volatility comes in, it's shaking up, scaring the longs. They start to get nervous. They start to set their stop losses, usually right where, I think this is a great trading vehicle. It's pretty obvious levels. And so the longs exit, and then shorts will pile in like vultures. And call me that. I'm one of them. And when you get an objective entry, there it was. I mean, it was clear as day. So from this one go in the textbooks for a perfect example of how what you want to look for on a support break. When I say an impulsive sell-off, that's it. That's about as impulsive as you get. Once that 1885 level went, there was no looking back. I mean, the slide started earlier today, and then just went right down through there. And then the other example is, you look at where we hit today, and we've been dancing around here. I'll try to flip this over to an intraday chart. 1 minute candles. So there it is. 1800 is right about there. I also always say this on unofficial trades. If I'm showing you on a chart and it's just showing you the raw support level, I like to cover a little bit above support. Why? Because if the buyers step in early, if everybody's looking at 1800, you might see people starting to nibble on it at 1805, 1810. So it's usually a good idea. And as I said, there was an update on the front page. If you're listening to this video, you probably already got that update. And what I said is if the markets don't break down, which they haven't, it probably would be a good idea to cover. And at the very least, I mean, palladium could continue to fall further. Let me go back to that futures chart 1 second here. Okay, I've traded palladium before, and it's kind of like natural gas and some others in coffee, whereas when it wants to go, whether it's up or down, it can go, and it can blow through on the way up resistance levels. It can blow through support levels. One thing we'll look for, remember back here, what I'm highlighting is we flagged. That was a nice, if you missed that initial breakdown there, you had an opportunity here, a second chance when you saw the bear flag continuation pattern, then it broke down, and that played out to right about almost exactly to the measured target there. And right now, would you short? No, I wouldn't. In fact, like I said, I covered, went long, and went long again. So I'm gonna stay long here for what will likely be a bounce trade, but not get married to it. I said earlier today, if and when that 1800 target is hit, if the stock market broke down with those wedges I just covered, yeah, you'd have a good chance that we're going to continue much lower. And we still could, because this is a one-sided, lopsided trade. Think of the stock market like this. Think of this recent run we've had in the stock market. Resilient. Everybody, see the comments, wow, the markets just goes up every day after day after day after day. And people give up. They give up shorting. And more importantly, they become complacent. Those that are long side buyers are buying every dip. And again, it's just it's simply a lopsided trade. And what happens is the more lopsided a trade gets, when the dam finally breaks, the bigger the chances, or the greater the chances you get those big moves down. So this could at any point or in the near future happen in the stock market, where you have a big slide down, and it might not be 5%, but it could be in a single day 3. It could be. I've seen 5% up and down days in the market. But anyways, that's where we're at, and let's just keep it simple. The stock market has not broken down, and palladium has been much, much, much more correlated with the stock market than it has with other precious metals in recent months. And again, it's a play on economic growth. And so what I'd be surprised if the buyers don't step in here. So I still favor something like this, and you trade it as you want. If you're holding out for this next target, which is the daily chart tells me that this one is quite likely going to be hit now, especially with this impulsive move. So if you're holding out for that and you're not an active trader, what you do at this point is protect profits. Lower your stop somewhere, wherever that number is for you. Lower your stop to protect profits if you're holding out, and ride out any counter trend bounce, or maybe not a counter trend bounce. So we go down here, and then you can cover there, or you can continue to trail it down. Why? This is just a 60-minute chart here, but when I go back out to the daily chart, this is what we're looking at. This is, we just broke down. This is only the first big red candle here on this daily chart, big red candle. And you see down here, when palladium wants to fall, it can fall. That drop right there, I'm going to have to start the trend line, my measurement a little lower, otherwise I drag this. I don't want to move that trend line there. If I click on it, I will. So I'm going to go down about as far under as I did there. What was that? About a It's hard to see. Let me move this line down here. 18, 19%, somewhere in there. And you can see about a straight drop down. So based on the technical posture of the chart, this could continue to fall. But again, right now, I think odds are pretty good we'll get a reaction. Let's not, let me go back to that one more time. Sorry, I keep toggling between these charts. Having a hard charting day here. Let's see. Let's go back to this 3-month hourly chart, and that's it. So that's how you can trade it, and you can try to, if you're an active trader, game a bounce off support. Maybe give it a little bit of room below there. They might want to run and clear out any stops and buy orders at 1800. And then something like this. Now, I had a couple people ask, what's my bounce target? I don't see a really good level. Maybe a 50% retracement. There's a little bit of a little minor resistance there, but the next big and clear resistance level is all the way back to that 1885. Remember, support once broken becomes resistance. It's that simple. That's TA 101, Technical Analysis 101. So, should palladium rally all the way back up there, and you're gaming a bounce, just periodically raise your stops along the way and let it run. Unless you just want a quick bounce trade. We already had a little bounce today. And then I think there's a good chance you'd get at least a reaction off the next back test if we get back to 1885. Now, I don't think we will based on the impulsive nature here. The stock market continues to rally. It's certainly possible, but I favor, maybe something about halfway or less before a breakdown and a continued move down there. So that's that. And just looping back to that PALL chart, remember, this is not exactly on the 170.81, and this is not an official trade with an exact target. I would always set my sell limit or buy to cover orders there a little bit above the actual support level. And I also like to align my charts. Even if I were to be trading the ETF, I would align the support levels and the entry and exit points with the chart of the futures. Futures, I put a higher weighting on than ETFs that track futures or a commodity. And then again, look at the daily chart here. Big negative divergence, very overbought and all that good stuff. Let's move on to the next one. I had a couple questions on nat gas today. Nat gas came close to firing the next buy signal, and actually now we're starting to get above there. So let me zoom back out. And again, I encourage you, if you're following any trade, whether it's natural gas, whether it's official or unofficial, on the front page post, like the one I made this morning on natural gas, right now there's a thread of comments below there. Several are my comments, charts are updated that I posted, questions from other members, and let me just look at let me flip over to another monitor here. Six. There's 6 comments in that thread, and again, you can subscribe. There's a subscription button at the top, so if there's any new comments made there, you'll get an update. I answered 1, 2, 3 questions. Okay, so here's what I answered. It was yes, we did move above 2326, and a couple considerations to make. Number one, natural gas is a very volatile, the most volatile commodity that I know of. There may be a more volatile commodity out there, but none that I know of, at least I can think of offhand. And so as such, it's going to whip around. It's going to move a little bit above support and resistance levels, trend lines, not, to the penny. In fact, this is not to the penny. This is to the nearest thousandths of a cent. That's what it trades in. This is $2, 0.326 cents. That's how natural gas is trading, and out to the third decimal. And when you look at it closely, we say that you want to see a solid break and or 60-minute close. This was earlier today, so we popped above there, but not impulsively. That 60-minute candle closed right back down, just a slight hair above that level at about 2.328 or so. So effectively right on the resistance level. The next candle, right here, you can see a red candle close all the way down here. So we had 1, 2, pretty much all day we've been testing that level, and we had another green candle close slightly above it. Now we're trading above it. So what you want to see from here is you want to see these reaction highs get taken out. I think they'll get taken out, but right now we don't have a clear signal. I want to see a solid green close, candlestick close up above that level for the next buy signal. Now, you may already be long from yesterday, the day before. I started highlighting it right here at the back test of the intersecting trend lines. Where was it? Right about here, I think. Yeah, when we zoom back out, and what it did, it continued to back test this trend line here, and fell right to support. It's pretty good support there, about 224.30, and that's where I think a stop should be on, any trades taken recently. But now today, if you're not in it, you want to see again just a little more, and pretty much probably a break over this high, certainly over this high right here, should do the trick. I really doubt that if we can take out this earlier high from earlier today, I doubt we'll fall back below there. And then of course, if you see, you print a 60-minute close anywhere up here, that would be a solid close above and give you a breakout. Doesn't guarantee the breakout won't fail, it just reduces the odds. So by an impulsive move, impulsive, again, I just showed you what impulsive looks like. That is the definition. If you looked it up, if there was a trader's dictionary or encyclopedia and you looked up impulsive move, that's what the candlestick in PA today would look like. That's certainly an impulsive sell-off, and you want to see, impulsive to the upside and green candle. One level I'm going to add, and then I'll move on here. So again, I made a front page post with charts, and if you trade UGAS, also comments on that about UGAS and decay. I encourage you to check out, I have an entry in the FAQ page. Go under resources on the top menu, and you'll see there's a link to the FAQ page on the site. And under the ETF related questions, there's I talk about the decay. Now, where I'm going with that, somebody asks about UGAS. Randy talked about how there's a lot of decay, and most certainly. But again, in that question, I go on to, or that FAQ question, I show an example. What makes the decay happen? It's volatility. It's back and forth grinding. Really, it's the daily closes, not the intraday. It's actually your end of day. This is when you don't want to be in UGAS, when you're kind of trending sideways. However, I also go on in that thing to post that you can actually do better. And I've never seen any articles. I see all this criticism out on the web about 3-time or 2-time leverage ETFs, how they're horrible buy and hold vehicles, blah, blah, blah. It depends on the trend. If you're in DGAS right here, which is the short, the 3-time short, or right here, or in UGAS right here, or if we do this and it's a fairly unidirectional rally. What do I mean by fairly unidirectional? Straight up, not a grind stair step higher. In that case, you will actually do better than 300%. So in other words, if natural gas prices increase 10%, UGAS, instead of doing 30%, could actually do 40% or more. Again, it's up to you whether you want to trade it and how long you want to hold it for. If you don't like the ETFs, for whatever reason, NG and then QG are your futures. NG is the regular contract. Again, in that FAQ, or not the FAQ, the comment section below today's post, I went on to tell you how much it is. Let me look at that real quick. I'm going to read my response to somebody because I checked it out. One contract of natural gas right now, NG, natural gas futures, symbol NG, represents about $23,200 exposure to natural gas, whereas one contract of QG, which is the mini or micro, the smaller contract, has a lower leverage factor. That only represents about a $5,800 exposure. So that might be, again, you don't want to ever put your entire account or even a good percentage of it in any one trade. But if you have, 50, 100,000 or more, you can use QG, and I'm talking your total portfolio, 50 or 100,000, and one contract's going to give you about a $5,800 exposure there. And the nice thing is that these mini or micro contracts, just like MNQ instead of NQ, there's NQ. I always go over this chart, but you can trade the micro mini contract or the E-mini or E-micro, which is, I think the leverage factor is 1/5 or 1/10 maybe of NQ. Yeah, 1/10 if I'm not mistaken. But it trades on the same price level, so it just has a different lower multiplier. In other words, a multiplier is whatever the multiplier is times the index value is how much money you're at risk, how much money you have long or short on the index. So enough on that. Let's get away from the that discussion, but I do want to bring it up because I get those questions a lot. Other things I wanted to point out to you today, and then we'll wrap this video up. Treasury bonds continue to, firm up here. I wanted to find ZB for you. Here it is. ZB's at the top of that falling wedge pattern here on the 60-minute chart. It hasn't broken out yet, but we'll watch that. I would put pretty good odds that if and when those index 60-minute charts break down, This will probably break out shortly afterwards if it didn't already break out before then. Again, CB or Treasury bonds. So no buy signal yet, just like we don't have a sell signal in the markets yet. And even though we have what appears to be a bullish falling wedge, we could continue to work our way down in here before breaking out, or we can just continue lower and the divergences get taken out and this never materializes. But either way, that's your most important level right there. I think it's a downtrend line, and then that 157.055, that's an initial upside target, and probably about all we'll get, my guess, before the end of the year, unless something big rock the markets. So maybe a quick trade to be made there, and again, if nothing else, you can kind of keep an eye on that along with the equity indexes. And there's your sell signal on crude. Remember, I've been tracking the last couple updates. These parallel uptrend lines, of course, with the lowermost being the most important trend line. If you have two, you always want to benefit of the doubt. You wait for the second one to break. And there's another example of technical analysis. We didn't just kind of start limping down. We broke it, and the seller stepped in. So, they're watching these levels. This is technical analysis. This is how it works. So there was an opportunity for a short entry pullback trade. And what I'm thinking, well, of course, the week's almost over here. So next week, if we get some more downside here, we get a back test or even a move down to this trend line, which I think is still very much a possibility. So that would be my first target. Could bounce and reverse there. That would be pretty bullish if we did, and that's all we got, and we went on to make new highs. Would show a strong bid beneath crude, but wouldn't surprise me. I'd put almost equal. I tell you, almost favor a move down here. You get a reaction there first, but then come on down to this trend line. It hasn't been visited in a while, so if we get that, where I'm going with this is that might be a good buy point on the energy stocks, because the energy stocks should be pulling back. I'll be honest, I haven't even looked at them today, but we'll do that right now. I've highlighted those recently as very bullish looking charts. XOP broke out recently. Of course, it's down 1% today because crude is down. That's simple. XES down 1.5. Very steady buying so far since the breakout, but nothing goes up forever. Crude was a technically based sell-off in crude today with that breakdown below the trend line. So therefore, the energy stocks are, who've had a pretty decent run lately. They're coming back in, and on top of that, XLE, although it broke out recently, ran into that first target I had at 61.45, which is a pretty decent resistance. So this stuff, it's not all coincidence. You'd be surprised how many times two completely different securities, crude oil and XLE, which are stocks, various different companies, many different companies, how the charts and the technicals kind of align with each other. In that case, you can see, if I put that trend line a little tighter there, you can see just like USO, we had a nice uptrend here as well. And this is a daily chart, but we broke it today, and you can do the same thing on the 60-minute chart right there. Just like USO, which USO is, there's a lot of crude ETNs. This is, I think, the most liquid and actively traded. It's the one I like to trade if I'm going to use an ETN. Or you can use the leverage ones like DWT, UWT, etc. But there it is. There's your breakdown there. Everything like I already showed you. It's pretty much that CL, or the futures, and USO is one of the ETNs to track. So that's it. That's a near-term sell signal on USO. Probably more downside to come, even if we get a kickback rally first. And let me see if I have anything else I want to show you before we wrap this up. I'll update coffee just because I've been highlighting that recently. So far, there was a slight, ever so slight momentum-fueled overshoot below the ascending broadening wedge pattern. That is this lower trend line and this one here. And this is called a ascending broadening wedge pattern. I can't really do letters here, but these things can break either way. So we'll watch this. But again, the next sell signal will come, and I think we'll probably get it on a break below this trend line, an impulsive break. I may have to modify that trend line a little bit now since we have that reaction. Let's do that. Let's just tighten that trend line up to catch those recent lows, and it still fits very well with those earlier reactions. So that's pretty much it. Break that level. You still have support there of 124.18, but as of now, we had a pretty decent correction in coffee. There could certainly be more upside, and as I always say, support is support until and unless broken. So right now, coffee is above that trend line support, and the primary trend, the larger trend, is bullish now for the time being. But I still favor a little more downside, and then again, I'm longer term bullish, more upside after that. All right, let's wrap it up here. I think that's probably most of the big stuff that I wanted to cover today. And the Bitcoin, I should update Bitcoin. Bitcoin, like I said, broke above the trend line the other day, the 60-minute downtrend line. That's where, oh no, daily. This is a daily chart, Bitcoin futures. But it was not impulsive, and we back tested, and we're above the trend. So we're technically the breakout's still intact, and we're back testing. The only problem with back tests are when you're back testing a downtrend line, trend lines are dynamic, and since they're dynamic, they come in at lower and lower levels every day. And you can back test for days, even weeks. I've even seen back tests go on for months. Depends on the security. So ideally, you want to start seeing Bitcoin move up, and then I think it's safe to say if we took out that high from yesterday, that would open the door to these targets that I have there in Bitcoin or GBTC. Again, these are Bitcoin futures. All right, so we'll wrap it up here, and since it's Friday, we'll do a closing market wrap video today, and I'll try to get back into the trading room. I've been trading and doing some other things today and going over charts, so there may be some questions and chart requests. I'll try to get to those as soon as possible, guys. Thanks for your patience. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.